Okay, hi everyone. So my name is Amos Barnes. In fact, I'm an economist. I got my PhD a while ago in the University of Chicago. I am also a CPA. But what I do now is mostly computer science. In fact, I'm not even data scientist. I'm more mathematician that use computers as well. Uh, I'm doing it for the last over 30 years. I have a company in Chicago. Now I have a branch also in Uganda. Anybody been in Uganda? Wow. Anybody been in Boston? Yeah.
My planning for next year yet.
Anybody in New York? Yeah, everybody. Anybody in London? Ivory Coast? How do you say Ivory Coast in French? Anybody?
Ivory Coast? What do you mean?
Ivory Coast. There's a country called Ivory Coast. How do you say it's in French? You know, they don't like when you call them Ivory Coast because
Côte d'Ivoire.
yeah, Cote d'Ivoire, very good. Because they used to be a French colony. So I have an office there too. Okay. And I'm having a lot of fun. And we will have a lot of fun in this course. It's a requirement. Otherwise, you don't pass the exam. You don't pass the course. I mean. We have a paper I will talk about in a second. The last 2 years, previous 2 years, I taught with my new framework. We'll use it this year too. It was a really good success and students really liked it. So I hope you do too. Everybody hates accounting for a good reason and for the wrong reason. I love accounting, among other things that I do, because it's very important. It's like reporting. You have to know really what happened in the business. Okay. So that's why I love accounting. That's why I got my CPA. I think that's the truth. I work mostly today in developing special systems and mostly in trading. Anybody does trading? Option trading,
Yeah,
stock trading?
little
Yeah,
bit.
I've heard about this.
Anyone? Who?
Yeah, I've heard about this and a little bit tried
You
once.
sound like my wife now. She always think about me. So I mean, it's a very heavy duty professional. Uh, it's a very fun. It's a very hard. And don't touch
Are
it.
you an algorithmic trader?
What?
Are you an algorithmic trader?
I am also an algorithm trader, yeah. And I usually that's only things that I know. Things that I don't know, I don't touch because it's really risky. I mostly do it on options today, and it's really came about 2017. And Emmett will talk about how it's related to the course we're going to talk about on the financial statement analysis. You'll get to know me. I talk a lot on the circuit, sound like it doesn't have anything to do with the course, and eventually you will see it's really right on the money for the course. 2017, I don't know how many of you followed, there was when Teva have collapsed. Anybody remember? Anybody followed? The stock of Teva collapsed from 32 to $12 and then even to $8 and then went back a little bit. Anybody follow that? Well, they're really in the news big time. At the time I
In
was
2004, some of us were in primary school.
So one more time.
In 2004, some of us were in primary school.
I'm talking
We
about
could not follow.
2017. 2017. It was, if I recall, February 2017.
It's when they bought another company and there was an American company that competed them and bought. That's what you're talking about, the merchant that
Right,
wasn't.
that's exactly. It's related to that. But one day, the stock was collapsing. The truth of the matter is, or the funny thing is, and why I'm saying it, I have a simulation to do corporate valuation. It's a different course than this one. And I did the valuation. I didn't believe myself. The company looks in bankruptcy. I showed it to my student. The students thought that I'm crazy. And the funny thing is that between the final class to the exam time, the stock price collapsed to substantially, really like over 70%. And this was really amazing. And I didn't really make any money out of predicting that the stock of Teva collapsed. But when I was looking what happening to the options during the process of the collapse, I was shocked. I discovered so many phenomena that for many years I was looking and I never found. So then I decided to write another algorithm run by itself that follows companies that has a collapse or a jump in the stock price. And then I start going back to the programming and a lot of things I have done since 1994. And now I have several teams around the world that that's what they do, and they work on a lot of those stuff. What we will do today, I will just introduce you to a special component I built specifically for this course that will help you, to summarize the whole course in accounting and also to teach you the financial statement or financial, not just the other two financial statements, the income statement and balance sheet, but also statement of cash flow. Let me start by the following statement, which is weird. Statement of cash flow has nothing new that you don't already have in the balance sheet and the income statement. I repeat that because it's a very important statement. Statement of cash flow, which I'm going to teach and I'm going to talk about it. There is no new information that does not exist already in the income statement and the balance sheet. So you can ask, so why do I need to study it? Why it's such an important, in my opinion, the most important statement? Because the way you present it, it's revealing a lot of information, which investor would like to know. So it really is a question of presentation, and we're going to go over that today. Okay, so let me start by sharing my screen. And by the way, this is my system, and I will give you the permissions to access it. On the left side, you have all the material for the course. Your version, you will not have those blue things because this is only because this is also a content management system that I can modify it online. You don't need it. And here you have everything you will need to know. By the way, this is a recording of the last 2 years. Those 4 lectures of the first 2 years ago, that's from last year. And I'm going to add this year as well. So whatever I'm recording today, I will add it to here so you'll have the whole recording in a nice way. Okay? Now, what we're going to study is everything is here. I would say it's 2, so I don't have to go like one by one. You can really see it and nicely really written. And we're going to spend at least today, the whole day today. Maybe we'll do some next time. We're going to spend on this, what it says, review of financial statements. And here I made that component I mentioned before. Is that clear? Can you see it's okay, guys?
Yeah.
Okay. In the left side, we have a balance sheet. In the middle, we have income statement. The right side, it's a statement you haven't studied, and I'm going to teach it today. And below that, there are, I think, 13 cases that I will teach them. And it will be an excellent review for, honestly, all the course you study in accounting. It's a good review. And after we review that, we will understand very well what statement of cash flow is. And what I did here is really, if you click on the button on the top left, it's clear data, meaning that's the way the financial statement looks like when you just open a company. Opening a company, we have nothing. We have no cash, no inventory, nothing. Everything is empty. We just built up, we just established the company. So all the statements are nothing. They are empty. Anybody have an idea how do you open a company? Anyone?
You have
Anybody have a company?
Yeah.
Yeah, go ahead.
Yeah.
Go ahead.
Yeah, so basically you have to go through legal advisory in order to open a proper company. So for example, limited LTD. And
Let's say you don't want to go. You want to, let's say in the state of Illinois. I have a company. I had a company. I don't have that. Sorry, just a second. Let me just shut that one up. Sorry about that. Let me just close it. I apologize. Let's say you want to do it yourself. You want to open in Chicago.
you need money, and that's it.
So how would you do it yourself?
You invest in your stock, in your basically stock.
Yeah, you go to the internet, you look for the Secretary of State corporate office. You download a form. It's really only two-sided page. You fill it up, send it to the Secretary of State, and 2 or 3 weeks later, you get a kind of a certificate saying that your company is registered. What you have to put there is really basically is the name of the company, who is the owner, which is you, who is going to be the secretary, it's you, where's your office, it's your basement, is that right? Or your bedroom. It doesn't really matter. And you just have to find a unique company name that it haven't been registered before. And you just say how much should go and be your initial capital. At the time when I had my company in Chicago, it was about $1,000 would be the cheapest because you pay less franchise fee, which is about $200, I think at the time was. And you have a company. But the company has really nothing. It's just a piece of paper. And that piece of paper, it's nothing then, just saying you have a company. But what the company is, I many times like to define a company as a balloon, something that has nothing in it. When you get that piece of paper, you can make a frame and put it on your wall, but it really doesn't have any meaning. Now that I have several offices, so I have an international office outside of the US, but the idea is the same. So after you have a company, you have to start the business. So what the first things will you do after you establish the company?
Invest in capital.
Exactly right. Based on the piece of paper you filed, or will you have, at least by law, to put $1,000. But $1,000 won't get you anywhere. So what you go is you go to the bank and you open an account on behalf of the company, meaning you are acting as an officer on behalf of the company itself. So you're opening a bank account by the name of the company, but you are just an agent for the company. But the bank account belongs to the company. And let's say just for this example, if you click on the first button here, it's like when you're really issuing, you're issuing stocks. In the beginning, it will be mostly for you. And what will be the general ledger that you write? Your cash will go up in the bank account for the company, and you'll have common stock. Let's say every number here, it's in millions. So you have 50 million cash in the bank account, and you have common stock, 50. Does it affect the income statement? Definitely not. Is that right?
Yeah.
Does that make sense, guys?
Yeah.
Yes.
Or does it affect the statement of cash flow? Yeah, I didn't even define what the statement of cash flow is. So maybe before I start talking about it, I just tell a few words, and I will teach it in a very weird way. And in the end, toward the second part of the course today, the class today, I will say the whole things again, and everything will make a lot of sense. Statement of cash flow, by definition, it is the difference between the balance sheets in the end of the year and the balance sheets in the beginning of the year. I will repeat it. It's a very important statement. Statement of cash flow is the difference between the balance sheets in the end of the year to the balance sheet in the beginning of the year. In the example I just started, as a company just started to operate this year, the beginning balance is all zero. And if I issue equity, I have more cash and my common stock goes up. So my equity goes up and my cash goes up. I hope that makes sense. Yeah, guys?
Yeah.
So what is the difference between just after one transaction? Let's say this year I had only one transaction. I only issued stock. What will be the statement of cash flow? The statement of cash flow has to reflect the fact that my cash went up by 50 million and has to reflect the fact that the common stock went up by 50 million. Is that clear so far?
Can I ask a question?
Sure, definitely.
I remember that the statement of cash flow relates only for transactions you did that increase your wealth. And if you raise the equity, it doesn't necessarily increase your wealth. So it doesn't go to the cash flow,
Well, let's
if I
see.
remember.
Let's remember my definition, by the way. My definition is the right, it's a common definition. Unfortunately, many times when you study accounting, they don't start it that way and they jump immediately just to tell you the structure and then you get lost. And I go to the basic. Basic is mean, let's see the definition. And the definition, as I said before, is the difference between the balance sheets in the end of the year to the balance sheets in the beginning of the year. And I will show you. We had this one example, we just issue equity. And when I issued equity, the cash went up by 50 million. That's a fact. That's what we did. And the equity went 50 million. As you probably know, nothing happened in the income statement. I didn't sell anything. I didn't receive any money from the customers. There was no sales. So there's nothing really happening in the statement, in the income statement. But I do see, I'm looking at the income statement, in the balance sheet, in the statement of cash flow, and I do see those two transactions, this transaction. I see here increase in common stock, 50 million. Don't worry, I'm going to go over it at least one more time, okay? If not 3 times, okay? So, and I see, that's one thing that I see here. 50 million goes up in the increase in common stock, okay? And then I see in the very bottom, it said change in cash. So exactly what happened here, the cash really did change in 50 million and the statement of, and the common stock went in 50 million. So it's exactly, according to my definition, it really is showing up in the statement of cash flow. The cash went up by 50 million. It's really the bottom line. And increase in common stock was 50 million. So far, it's holding according to my definition. By the way, that will make your life very easy to really understand one of the most complex statements. When I was an accountant, I wish when I studied accounting, somebody had defined it that way. My life could have been much easier. In any case, it's holding up. But let's look at other transactions. How about a company needs more cash to do the business? The next thing is you go to the bank to take a loan, or you just issue bonds. Issuing bonds, by the way, It's very similar to taking a loan from the bank. Again, who is taking the loan is the company. I am as an officer, act on behalf of the company, and I go to the bank and take a loan on behalf. So what's going to happen now? What's going to happen to the cash in the bank account after taking a loan from the bank? Anybody?
Increase.
It will increase. Very good. And what else will increase from what you learn in
Liabilities.
accounting class?
Long-term liabilities.
The liability. Very good. So let's click and see if that's what happened. Let's click on the issue date. And how much debt did I issue? I issued 600, means I bought 600 million. So how much cash I have now? I have 650, make a lot of sense. My debt went up to 600, and I have equity of 50 million. It balanced. How do I know it balanced? Because all the total assets is 650. The only thing changed is really my cash is 650. That 650 has to be equal to liability plus equity, as you learn in accounting. My liability is right here, and my equity is right here. Is there any effect on the income statement? Definitely not. That's why we don't see anything. And let's see what happened in the statement of cash flow. Oh, look at that. Increase in long-term debt. The assumption is that I took a long-term loan. So I do take a loan for 600. It's appearing right here. There is a 50 that I issued as a stock, and the total increase in the cash is 650. So everything's in the difference between the balance sheets in the end of the year to the balance sheets in the beginning of the year. It's reflected in the statement of cash flow. I haven't really got into the why I should really in a minute. Don't worry, we'll get there, and we'll do it several times. But that will be a beautiful exercise to do a review ever since you learn in accounting, and also appreciate the statement of cash flow. By the way, one thing can convince you that the statement of cash flow, it's really derived from the difference in the balance sheet. Some of the numbers we'll take from the income statement, as we will see in a minute, but that the fact that there's no data entry here. Later on, I will tell you that if you want to invent more transactions, you can do it by typing the data in those fields, and they will act appropriately. But we will wait to that. But one thing I wanted to attract your attention, that in the statement of cash flow, I'm not going to put any number. Every number that come here already is derived from this difference. Okay? Can't really convince you more than that. Okay? Let's go to the next one. We're buying inventory. Anybody wants how much we're buying inventory? 800. Anybody want to tell me what's going to happen? Balance sheet, income statement, if a company is buying inventory?
In the
Yeah.
balance sheet.
Go on, Sam.
Inventory will be added in the
Very
past.
good. The inventory should change to 800. By the way, I could have typed it here. But when you click here, it does it automatically for you. Okay, let me click it and let's see. I click it here. So you see it's nice. It put the 800 for me. Okay, so my total asset is the cash that I raised. It's the inventory I acquired. So total current assets is 1450, which is also the total asset because I don't really have any long-term assets as of now. And in the other side is, well, how did I finance buying the inventory? Here, the assumption is that I just got a loan from my supplier. So I didn't really pay my supplier yet. That's why I put it in the current liabilities. So I owe the supplier 800. I took a loan from the bank of 600. So I owe, really my total debt is 1400. And I have common stock of 50. That's the way the balance sheets look like. That's what you learn in accounting class. I just didn't really do the formal accounting or the general ledger, blah, blah, blah. In my opinion, you're going to be a manager. You should know those stuff by heart and have the common sense. And this one is really more for managers style of teaching accounting. So this is my balance sheet. Is there anything in the income statement? No,
Not yet.
No change.
I haven't sold anything. So now let's see what happened here in the statement of cash flow. I need to catch now also that 800. So let's see, which numbers do we have here? I have the 600 still there. I have the 50 it's still there. I see the 650 and change in cash 650. I'm missing something, don't I?
No.
800.
Because the
Yeah, I
inventory
do.
is in credit, not in
What?
cash.
So what do you say? Anybody have an idea?
If
It
you
seems
bought it
like
on,
I lied to you, didn't I? I did lie to you. Seems like I need to explain that.
No, this is in cash. This is just an
No, but
inventory
hold on, I
credit.
don't see the inventory. I told you it's the change in the balance sheet. And all of a sudden, it was good when I did issue the equity. It works perfectly when I issued the debt. But when I did buying inventory, it didn't show at all in my statement of cash flow. Nothing changed. So there's something wrong. Seems like, but no. So let me
if
explain another.
Can I ask a question?
Sure, definitely.
It depends on the in which way we'll accept the cash from the sales. I mean, if it will be cash, so it should be in cash from operation, and if it they will pay us on credit, so we
Oh,
put it in
beautiful.
another
You're
section.
getting there. Beautiful. One thing you can tell, Amos, you're right. It seems like you lied to us. But one thing I'm noticing that cash didn't change. Is that right? So the bottom line, by the way, the bottom line is the change in cash. So this one always, after any transaction, will always reflect this change. Don't worry about it. I will go over it at least 3 times. So I just want to get the essence, really a very good understanding. And don't worry, I will go over this enough time that it will be mastered by the end of the class today. One thing is the change in cash is always the bottom line. Later on, I will go over the structure, don't worry about it. And you say, well, it's true, but there's a change in the inventory and I'm not seeing it here. That's true. There's also a change in current liabilities and I don't see it here too. So there's something in inventory and current liabilities. Somehow they are not showing in the statement of cash flow, and it should bother me because I said statement of cash flow, it's the difference between those two balances. And I'm going to resolve it in a second. And on the other hand, the long-term liability haven't changed, which is good. No change here. No change in the equity, no change. Everything is perfect. Is the only thing is the statement of cash flow didn't reflect the change in inventory and the change of the statement of the current liability. And there's a good reason for it. There is an account here. If you look at it, in the operation, it says a change in working capital. Anybody sees that? Or increase minus increase in working capital. So I need to define to you what working capital is. Otherwise, we don't know what it is. So let's define what is working capital. Okay, so what is working capital? Definition of working capital is current assets minus current liabilities. That's the definition. Okay, so what does it mean, change in working capital? I need to take the working capital in the end of the year, which is the difference between current assets to current liabilities, not including cash, So let's make sure that we current, I'm missing a T here. And we have to define it carefully, not including cash, okay? So I need to take the current assets, the end of the year, not including cash, subtract from it the current liabilities. So I get the working capital at the end of the year. Do the same things for the beginning of the year and take the difference. That will be the change. Okay, so let's look at our statement. And what is the working capital at the beginning of the year? What is the total current assets, not including cash? It's zero. The sum of those three, it's zero. Liability was zero. Okay. All of those, the current liability was zero. So 0 minus 0 is usually 0. So working capital at the beginning of the year was 0. So let's write it down. Okay. So working capital, let's call it working capital as a short time beginning of the year. Let's call it 0, meaning the beginning of the year. The working capital in the beginning of the year was 0. Let's calculate now the working capital at the end of the year. Let's say 1, like let's say the end of the year.
It'll be also
Okay.
0.
Let's
isn't it?
let's calculate it. Let's calculate it. And we're not rushing anywhere. We have plenty of time. The beauty of this component, it's allow us to have a lot of time to really analyze and understand it very carefully, very well. So let's see the end of the year. Current assets, not including cash, it's 800. Everybody agree? We have only the inventory, the current assets.
Yeah.
How much is the current liabilities? Current liabilities, it's only 800. 800 minus 800 is usually 0. So my working capital, and now you can say, you know why I'm not seeing it in the statement of cash flow? Because the statement of cash flow, we're putting only the change in working capital, and the working capital haven't changed. Because the working capital in the end of the year, it is 800 minus 800. The current assets went up by 800, my inventory, but at the same time, my current liabilities went up by 800. So my working capital haven't changed.
So it will only change if we use cash instead of.
No, but remember, working capital don't include cash. And why doesn't it include cash? I like what you're driving to. Because the cash we're putting in the end. The change in the cash, we're putting it in there. That's why we took it out from the cash. Don't worry, I'm going to go in that so many directions and everything will be beautifully clear. But at least I didn't lie to you. I gave a nice definition, and so far my definition holds. Change in working capital. That's the only thing. So when we write statement of cash flow, we use working capital or the change in the working capital. Okay?
But if you always add current liabilities to add working capital, you will always have the difference 0. How is the another way?
We'll see other example. Hold a second. You will see it will change. That's why I have another 9 cases. I'm going to spend enough time on each one of them and explore them very well. It's covering 90% of transactions that a real company does. The rest are derived from that, very similar. Okay, but we will explore that. You're right on the money here. Your question is really need to be addressed, but give me some time, okay? We get to that, don't worry. Now we want to sell inventory, but when we're selling inventory, okay, we're selling some of the inventory for $12.74, part of which in credit. So let me click on it and then break it down and see what the effect is. Clicking on it and let's see what happened. Oh, my cash went up a lot. My account receivable, it's 7. My inventory went down to 9. I want to understand it. I'm going to go over the whole things. You know, when I sell inventory, it doesn't really affect my current liability to the supplier. It doesn't affect my long-term liability, definitely not. Doesn't affect anything with the fact that I issued stock. Oh, I see a profit here. Interesting. So we see one thing that is new this time. Transaction number 4, has also effect on the income statement. The first 3 had no effect on the income statement. The fourth one does. And let's explore it. I sold inventory for a price of $12.74. Let's write it down here. I like the primitive. You'll get to know me. I like to use beautiful technology when I need to, but I love the fundamental knowledge when I have to. And here I really do want to understand what happened. My revenue was, how much was it? 794?
12, no.
12, yeah, you're right, 12 something. Yeah, we'll look it up again. 74 maybe. I will look it up again. Yeah, it was 1274. That's what it says here in the description. By the way, although this is short, you have a different, every transaction is well defined here. Okay, this is transaction number 1, a whole nice description for each one that I'm going to go over. See, number 4 is a little more elaborate, so I'm going to spend more time on it. But they have beautiful descriptions. Anybody speak Arabic? Anybody speak French?
Only Hebrew we speak.
So if you want to see,
No, we speak Arabic here.
nobody speak Arabic. How come?
No.
No, I speak Arabic. I'm saying we speak Arabic.
So if you want to see it in Arabic, just click here.
12.
Okay. And in fact, this is my previous student, by the way. A previous student of mine even made a video. I love that student. One of my favorite students.
You know Arabic or you just...
All my students are my favorite.
Yeah.
So, but he did a beautiful job. He also recorded here the whole explanation in Arabic. If anyone knows French, I would love to have a recording in French and I will put it up. That would be really nice. By the way, this is in French.
Yeah, it depends how much you pay.
And I didn't pay him any things. In fact, he paid me. No, he didn't pay me really.
No, I'm kidding, but I could do the translation if you want.
Yeah, you're more than welcome. You might find a business with me. Okay. So this is just beautiful stuff. Let's go back to the English. I don't really know. I know Arabic when I was a kid. I know Arabic quite fluently, unfortunately. I grew up in Israel, so I forgot my Arabic. So, but French I don't really know, unfortunately. But I do know English to some extent. And I can say we did all those 3, yeah? And now we're going to the 4th one, and we're exploring these transactions. And by the way, as I said, every transaction is well described here. Okay, and I'm going to go over all of them. And when you go over that at home, you're more than welcome. Look at the description, look at the video. This is French. Why is it French? I thought I did English.
But where the 50 disappear?
Let me just go back to it. And let's go here. And I'm going to clear up the whole things again and start all over. 1, 2, 3, and I'm in the 4th one. Okay.
Yeah, how the 650 become
Yeah, we're going to go over that. Don't worry. Here we go. First of all, I want to describe that by the income statement you see, I wasn't enough. If you read the description, it tells you exactly all the numbers. Okay, it doesn't really, you don't see it in the click. But if you go to the descriptions, it tells you transaction number 4, you are selling for $12.74, and out of which 7 was for credit. Okay, so your cash in your hand was lower. You didn't get the whole $12.74. We're going to see that in a minute. How much was the inventory? If you look here, you have explanation telling you that the inventory went down by 791. Okay, so that's part of the description of the transactions. So if I sold inventory cost was 791. The revenue, it means the sale price of the total. By the way, you can look at it, total inventory I sold during the whole year. It's not like one time. Remember, this is really aggregations of the whole year. Okay, so I sold the whole year total for 1274, but it cost me all the inventory I have sold 791. So how much inventory I have left with?
9.
It should be 9. I had 800. I have left with 9. How much is my operating or gross profit? Let's start with that first. It's 483. The difference between 1274 minus what we call cost of goods sold. Okay, it's 791. We got 482. This one you should be expert by now. That's what we did in your. I think we had 8 sessions in accounting, if I recall. But you had. Did you have managerial accounting as well?
Yes.
Yes.
So I think about 4 or 5 for financial accounting and about 4 for managerial. Am I right? Is that about right?
We
We had only managerial accounting class.
You didn't have managerial accounting?
We had only
You
managerial
didn't
accounting.
have financial, meaning balance sheet, income statement you studied.
We went over it, but not in depth. Let's go.
That's okay. I didn't lose anything. I'm going to go very
We are not, let's say.
This is really could be excellent review / learning. Okay. So our logic says that if I sold something for 791 and I collected 1274, the difference is a profit, but we call it gross profit. Why is it gross profit? Because I didn't count for overhead or indirect costs like managerial expenses, how much it cost me to rent the building of the managers, how much I paid salary to the managers. Okay, all of those are not there. So that's why we call this one gross profit. When we delete from it sales and marketing expense, general and administrative expense, I will elaborate a little more what they include. You know what, let me do it now. General and administrative expense, it's really usually everything that has to do with salaries to the management, you know, renting, as I said before, the building of the managements, all the expenses of the managing teams. Now, when I do marketing, that will go here, all the expenses on marketing. Sales is different than marketing, and all the expenses we sell on the selling. Selling is usually closing deals and all of that stuff. Marketing is really get the customer to the door, have leads and all of that stuff. Everything you spend on that, it goes to there. So after you subtract those two, you get what is known as operating profit. It's known, very known in the finance community as earning before interest and taxes, EBIT. Let me write it down, okay? Let me write it down. By the way, it's all coincidence. I could have prepared before, but I know that the brain of a student like it, okay, when I write it this way. EBIT is equal to earning before interest and taxes. Very important way to, I like it very much. It's also operating income, it makes sense. But this is a beautiful definition, very important from finance point of view. And we'll see it in a minute. Okay? So after doing that one, and now we know what the definition of this one, pay attention. The next in line is interest expense. We don't have yet. We will have an example. And then we have taxes. And only after taxes, I have net profit. So that's the profit I made during the year. Okay. You most likely If you didn't, I will tell you now. This profit goes to the equity. You see, this number here is not coincident 483. It's 483 because it shows me whatever income I have had this year. And I'm going to give you in a minute the exact definition of retained earnings, which is a little broader than what I just said now. For now, for this example, it is really the profit of the year because we started with a company with nothing, okay? So we had no profit in the beginning of the year, and now we have 483 this year, so that 483 will go here. Now, amazingly, the balance sheet is balancing. Total current assets is 1933, which is the total assets due. On the other side, the liability is 1400 plus 533. It's 1933. Beautiful. It's balanced. Why does it balance? Let's look at it and think about it. I got cash. What the cash went to? Went to here. How much cash did it go here? Anybody wants to tell us how much we had before?
We had
650.
650, is that right? So let's write it down too again. Do it again and again at home, okay? Honestly, I'm not exaggerating, okay? You should. Let me take that one down up here. I want a new page here. Okay. Okay, we had cash in the beginning. Let's call it cash zero at the beginning of the year. Okay, or before the transaction. I really shouldn't call it cash. We had cash before this transaction of 650. Everybody agree? How much cash added this time? We had 1274, but not all of that was paid in cash, some of which was given a credit to customer. So the only amount that I receive is 1274 minus the 7, correct? So let's write it down.
Where this is written? In the red period?
Here, I will get to that in a second. In a second. Okay, I will get to that in a second. Okay, I had received 1274 minus whatever I give credit. That should be my new cash. Let's add it up. Anybody has a calculator?
It's 1917.
How much?
1917.
17. That's exactly the number we got here, isn't it? The computer did it automatically. So that's the number we have here. So this 1917, it's made of getting 650, getting the revenue minus the credit I gave to customer. That's the cash. So let's see if that's really what I see in the statement of cash flow. Let's look at the statement of cash flow. How did I get it? Remember, this number is always the difference between this one and this one. So 1917, it made of what? Oh, beautiful. Look at that. 483 appearing right here. That's the profit of the year. And to that, we're adding 784. Wow, what that number came from. Anybody wants to guess? Anybody? Anybody wants to guess what that 784? What is
converting from inventory to cash?
What is working capital?
Current assets.
Without the cash.
Say it again.
Current assets minus current liabilities.
Without the
Oh,
cash.
beautiful, beautiful. I like what you did. Oh, very good. I'm glad. Let's do it the right way, okay? And go ahead. What's your name?
Ido.
Ido. Now, after this transaction, okay, the working capital, which we had in the beginning of the year, was 0, correct? And now the new working capital after 4 transactions is equal to what? And let's go slowly, as you said. I like the way you did it. Let's do it. What is the end of the year? We need to take the current assets. How much is the current asset? 9 plus 7. Is
9
that
plus
correct?
7.
So how
Yeah.
much is it? Usually
10.
it's 16. Is that right?
Yeah.
Good. So my current asset is 16. Let's write it even 9 plus 7. This is really my current asset. And from this, I need to subtract what? The current liabilities. Is that right? That's what we said.
Yeah.
How much is it?
800.
800. Okay.
Yes.
So let's put minus 800. How much is it? It's a minus. Pay attention.
Yes.
Okay. It's a minus how much?
It's minus 784.
84. Beautiful. But we see a minus there. You see that?
Yeah.
What happened to the working capital? From 0, it went down. It didn't go up, it went down. Is that right? Because my liabilities are much higher than the current assets.
Yeah.
So it went down, it
the
didn't go up.
company is,
And what I was supposed to do, what the definition says here, and don't worry, I promise I will go over that at least 2 more times. A minus increase. How much is the increase? The increase is minus 784. So minus minus give me a plus.
plus. Yeah.
So that's why we have a plus 784. Don't
Understand.
worry if you didn't got it yet. Accounting is the easiest, honestly, the easiest professional, but it's the most confusing, the brain. And the brain had it because it's confusing. That's why you have to go over it 3-4 times and then you realize how easy it is. So it's not a magic. There's no magic here. After we do it 2, 3, 4 times, everything will be so clear. But at least we are consistent. Nothing in my definition have not fulfilled, and we're doing good. So we have net income. It's right there. We have this one. Hey, beautiful. You see, 1267. You see that? This is cash generated from operation that's going to help me to explain the 1917. I repeat it. The 1267, it's cash from operation. I haven't defined anything. The truth of the matter is like I went from the end to the beginning I'm doing, and then I'm going to go from the beginning to the end at least twice, and then I'm going to do it again, and everything will be clear. But at least I'm consistent. This number plus this number give me this number. I'm adding to it the 600 plus the 50. That's 650. Oh, bingo, I get 1917. Amazing. Isn't it amazing? It works. And pay attention, the only place I put data, it's only in the income statement, the balance sheet. Now, just nobody, by the way, somebody should have asked a question, because I kind of cheated you, and intentionally, because I wanted somebody to ask a question. What did I say statement of cash flow is? Statement of cash flow is the difference between the balance sheets at the end of the year minus the balance sheets in the beginning of the year. So where is this 483 come from? Is it coming from here? It happened to be the same number, but it really came from the bottom here. Retained earning. Retained earning, as the name implies, it's the income of the year that I did not distribute as a dividend. Please write it down, whoever wants to. Retained earning, it's the profit from the year minus any dividend I paid during the year. Since I didn't pay any dividend, my net income is 483. So that number goes automatically to here. And since it goes to here, it's also the difference in the balance sheet. So this difference, what goes to here, it happened to be equal to the income statement, and the net income in the income statement. I want to do it one more time. This transaction, it's a very important transaction. And I want to, that you feel comfortable. Don't look at, I'm putting it in rules. So it's, you should learn those rules, but you want really to feel it. You're going to be a manager. You're not just an accountant. And as a manager, you really have to really feel comfortable. You really understand every number in a good way. Let's do it again. Let's get the mirror. What really happened here? Let's go all over. Okay, let's go all over. I erase the whole things. I put those three again and start the fourth one. We have 650. We have inventory 800. We're selling inventory, and the inventory is going to go down by 791. Is that right? Because that's what we sold, and that's what the store, the complete store is written here. Okay? That's what cost me, whatever I sold. So on one hand, my assets, the current one went down by 791. On the other hand, I sold those 791 for 1274. Let's write it again. Nothing will happen. This is good. Good to repeat. By the way, there's an expression in Hebrew, it's known, that says that if you want to learn something new, you should repeat what you know several times. Otherwise, it will be hard for you to follow, to continue learning new stuff. So repetition is a good thing to do. We're selling something for 1274, but those 74, I'm getting cash. Those are made of cash. Or let's write it this way, it will be easier. Revenue is 1274. I'm dyslexic, by the way, you can tell. And cash, I'm receiving the difference. I mean, I have credit of 7 or 9. How much was it? 7 or 9? I forgot. 7. And cash is the difference. Is that right? I sold for 70. So how much does that come? That's
1267.
67. Is that right? 67. See, I'm dyslexic. I always get. Okay, 67. That's really the set. I sold to somebody. He told me, I sold so many to many people. Some of them I sold in credit. They paid with their credit card or whatever. And some of them paid cash. That's really the merit. How much it cost me in inventory?
791.
Exactly right. That was 791. So the difference definitely will be my gross profit. The difference, is that right? And I think that was, how much was it? 483?
483.
Yeah. Now look at that several times. Don't be shy, by the way. That's revenue. That's revenue. Let me do it this way, maybe. Okay. This revenue minus this one, that's my gross profit. Is that right?
Yeah.
But did my gross profit was all in cash? No.
No.
How much out of my gross profit was in cash? How much was it in cash?
Just
490.
deduct the
I should
credits.
subtract the 7, shouldn't I?
Yeah, 490.
Beautiful. So I really sure this is really 7. In cash was 7. Therefore, my gross profit in cash should be only 486. Am I right? Everybody happy?
Could you repeat that?
Bottom line, really what happened is, okay, that my cash account went up by 486 plus the inventory, yeah? The inventory was replaced by cash, correct? Pay attention. I'm selling for 12.74. Is that right? My profit is 483. Why the profit is 483? Because this one covered some of my inventory. Is that right?
Yeah.
This one plus this one is really my revenue. Pay attention, the revenue is increasing the cash. But this transaction reducing my another current assets, the inventory. So my current assets is going up by how much? By this amount. Everybody agree? One more time.
Yes, yes.
I'm selling something for 12.74. It's going to increase my cash if everything was in cash. But what it's going to do is really this 12.74, okay, replacing the inventory. And it's also, you know, part of which is really a credit of 7.
So, sorry, Professor, isn't the number supposed to be 476 as
Well,
far
yes,
as the...
You might be right. Yeah, you're right. Thank you.
Okay.
Thank you. I told you I'm dyslexic. Thank God I have students. Otherwise, I don't know what to do.
And it's
Okay.
in credit 7, not in cash 7.
So it'd be this minus this, give me this one. But let's see the meaning of everything. Please do it at home. Do it 5 times. And don't be shy. It's not mean that you are stupid. You are not. Accounting is annoying. That's why people hate it. But it's not hard. It's just annoying. And you want to look at it from many ways, and then eventually it becomes to be so easy. 1274, I sold inventory. I had inventory in my stock, and I sold it. It was worth 70.91. That's what I committed to the supplier. I sold it for 1274. So my current asset should have gone up by that difference, and it does. The only thing is my current asset. Let's look at my current asset again in here. Okay, after this transaction. My current asset, pay attention. This part went down by 791. On the other hand, I did got the 1274 minus 7 here plus the 7 here. So whatever the increase here plus here, it's exactly the 1274. One more time. Whatever increase in the cash plus the increase in the credit, it's exactly the 1274. Whatever.
Professor, but sorry.
You got it? Yeah, go ahead.
No, sorry, continue. I don't want to interrupt you. I will ask later.
No problem. Don't worry. You don't interrupt me. I have all the time in the world.
I saw that in the previous slide that you saw, not here, when you wrote the numbers, the cash is 7. Why the cash is 7?
Oh, I just broke down the revenue because I sold to people total during the year 1274. Most of them paid me cash, but some of them.
No, but why the 7 in cash next to the 476?
It's just it's a fact. You know, that's really what happened during the year. Some of the customers paid in cash, some of them.
I mean, in the barks, I think Lee means that in the barks it should be in credit 7, not in cash 7.
The credit is it's 7. So some people haven't paid me yet. Okay.
No, but I'm asking about the 476.
400. We'll come to that again in a second. Okay. We'll come to that again too. 1 second.
Okay.
But first of all, I want to understand that and feel it, not just learning rules. When we look here, my revenue, that's supposed to be, there's really money that's supposed to come to me, unless I give a credit to somebody. So the 1274 should increase this number or this number. And indeed, that's really what happened. This number went up by 1267, and that 7. Together, it's 1274. That's beautiful. On the other hand, what else happened? When the cash or the credit went up, which is assets for me, I'm expecting to get that money next year, yeah? It's my inventory went down. How much the inventory went down? By 791. That's really the cost of the inventory that I sold. So now if you look at how much those two increased, this one decreased, you can say the truth of the matter, the net increase in those three accounts together, it's exactly my gross profit. Is that right?
Yeah.
What do you say? 483. Does that make sense?
Yeah.
What do you say, guys?
I have a question. The 9 inventory, so they cost 791.
Yeah.
Cost of goods, it's equal.
Correct. So the inventory went down by 791. So
Okay.
my current asset, if you see there, will go up only by 483. If I wanted to know how much is my gross profit in cash, pay attention, I will have to look only at those two, because this one increased only by the cash. This one I won't count it. And then this number will be lower by the 9, by the 7.
By the
One more
7.
time. Is that right? Does that make sense?
Yeah, 476.
Okay, that's why we went, and somebody asked before, rightfully, what is the meaning of this 476? 476 is my gross profit in cash, because my profit, gross profit was really this one, because somebody's supposed to pay me next year. But how much I got profit this year in cash, it is less than 7. I didn't get that 7. My gross profit is 483, but
Yes, so
I didn't get the whole thing in cash.
Professor, you just need to remove the 7. It's in cash 476.
Yeah, I saw that. It really said it should be in cash, that one. I just wanted to, maybe I'll write it this way. Do you mind? I'll feel better. It really is equal to the 483. That will be better. I think you're right. Is that right? Okay.
Yes, now I also understood.
Now it's better.
Yeah, I didn't like the way I wrote it before. Okay.
But is it correct to say gross profit in cash? Gross profit is gross profit.
You're right. So that's when you look at the income statement, that's the number you see. Okay. And here we go. Let's go again. Look at it. Okay. Let's look at it. You see, you get gross profit is 483. Gross profit is gross profit. You're absolutely right. Income statement, it's not in cash. It's based on the accrual method. Is that right? I don't look at the cash. I just wanted to extend the understanding. If I was looking at it in a cash matter, I really didn't get 483 in cash. I got only 476. Okay? Beautiful. Let's go and try to understand here. By the way, if this is a statement of cash flow and I want to understand that 1917, and we said, what is the 1917? 1917 is made of the original 650, correct?
Yeah.
Plus the 800 I got as a loan, correct? And then I have to subtract the inventory and add the sales and all of that. But let's look at it in a different way and try to understand what's happening here. And that's a little hard. That's why I spend a lot of time on point number 4. What do I see here? The 600 is there. Let's increase the cash. So the 1917, let's say I open this one and this one at the same time. Let me make this one a little smaller. How do I get rid of this one? Yeah.
Excuse me, Professor, I was late a bit to the beginning of the class. What is the break policy of this lesson?
One more time, I apologize.
I mean, when do we have breaks? We are all of us after working hours. We want to take a coffee.
I didn't really understand. I apologize. One more time.
Again, I'm sorry.
The
I was
break. When do we have the break? For
Well,
15
if you
minutes.
depend on me, you will never have a break. That means we have to have somebody in charge of breaks. Who wants to be in
Yoram.
charge of making sure I give you a break?
Yoram.
Who was the guy that? No, I have an idea. We'll have two people. One make sure. No, you can't because we are virtual. Okay, you'll be in charge telling me when the break is. How about that? Done deal? Just let me finish that one and we'll take a break. Promise, okay? Finish that number 4. I want to look at that in one more time. We have, how did we get to this 1970? Let's see one more way. We raised 50 million. That was in equity, correct? We raised 600 in debt. That's, we have it here, 650. That's plus this, give me 650. That's beautiful. Now I want to understand this part because this part plus 650 gives me exactly my number 1917. Am I right? So let's really understand what is this 483. So let's look at the 483 plus. From operation, I have 483, and I want to break it down in a minute again. And in addition, what else do I have? 784. 784. And what is the really, is that plus the 7? Yeah, it's plus. So that's one equal to that number. Everybody agree?
Yes.
Okay. Is the 483 was really cash?
No, only 476.
So how about we do that? Be nice. -7, is that right? That would be gross profit in cash. Do you agree? And just so I don't cheat, I'll just +7. Is that right so far? How much that plus that give me, by the way? Anybody wants to tell me how much that plus that gives me? So let's write it again. 19, 17 equal 650, which we know that's really basic money to the company. Then we have the gross profit in cash, which is 476. Everybody agree?
Yeah.
Is that right?
Yes.
This is this one. And what is the last one? Anybody? What is that number come to?
193, 91.
Yeah, what does it remind you? What do you see 791 here?
The remaining inventories.
Oh, so what really happened? That's so beautiful. See that, and now we can take a break after this one. Why is it so beautiful? I really understand now how the cash went up to 1917. Very simple. I raised money for 650. I made money in cash, 796, 476, and I sold some of the inventory. Beautiful. Couldn't be more beautiful than that. And that's what the statement of cash flow does automatically. That's beautiful. So those two together, by the way, giving me from operation. So that will be the 1276. So, and that's, we take a break now. Okay. This is, if you take this one plus this one, you don't really need to cancel them out. I mean, I'm just playing with it so you can see the sense, how that come to. But really this one plus this one, it's known as operating cash from operation, but we'll talk about it more after the break. Thank you, guys. I'm going to leave the recording on. I will stay here a few more minutes. Anybody wants to ask me any question, And the guy in charge of the break, when we're coming back, 2 years from now,
4:30.
what? How long is the break?
4:30, yeah.
30, 4:30.
How long?
30
15 minutes. 10 minutes.
15 minutes. My clock shows 4:20 and 25 to 5 according to my clock. That's okay. And if you be late than a minute, I won't do anything. So 2 even. Okay? Just take your time. And I'm going to leave it open and I will answer questions whoever wants. And that will give you opportunity. And then we resume the session. Go ahead. Anybody that has
Amos, yes, I have a question.
Go ahead.
Can you please one more time explain what is working?
Yeah, but I don't see any pictures here. No video. That's okay. Let me share the screen again. Yeah, go ahead.
Yeah, I'm just curious about, like, can you please one more time explain what is the working capital? I mean, like, what is the essence? I didn't have an idea now. I mean, like, maybe
Which one? Which one again?
Working capital. Do you remember, like, the?
Yeah, the definition of working capital is the difference. The working capital is the difference between current assets, not including cash. Meaning, in this example, is those three.
So the current assets here, it's 9, yeah, right?
Yeah, not including cash.
Yeah, okay, 9.
So this one plus this one, in this example, the current asset is 16 minus current liabilities. That's working capital for the end of the year.
And why we counted the account receivable here?
Account receivable is a current asset.
Okay.
It's money you're supposed to get in the next period.
Yes, right.
Good. It's very, very confusing, but it's really easy after you do it several times. Nothing really hard. It's just too many detail and annoying. But after you master it, it becomes to be so easy.
Because actually, working capital, we didn't have this concept during the account subject that we.
I tell you honestly, the reason I made this component, because it's not only a University of Haifa. In fact, the University of Haifa, they're doing an excellent job. My experience is that one course in accounting is not enough for somebody that comes with no background. So I made this component to try to teach it in an innovative way so that you really grasp the idea and the understanding and do it as fast as I can. So don't really teaching you general ledger and then how you do it and then you get lost. Here you get a sense, you get a real understanding. And you should really view my video at least 3 times and then you know it very well.
Professor?
Yeah, sure.
Discussion and continue with the working capital. Can you go back to the board picture? Yeah, this
Definitely.
one.
Definitely.
The last calculation you made, how we got this 1917.
Correct. See, we started a company with nothing.
Yeah.
After 4 transactions, we ended up in this point. So
yeah.
My current asset, not including cash, is 9 plus 7, meaning 16. Correct?
Yeah.
Minus 800, that gives a minus 784.
Yeah.
That's my working capital the end of the year. Okay?
Yeah.
That really is this one. Now, since I did not have any working capital at the beginning of the year, if I want to see an increase, I will take this one minus this one. So my increase is negative, meaning it's went down, correct?
Yeah.
Oh, and now the definition here, it says I need minus increase. So it's minus minus, give me 784. Don't worry. Toward the end of the session, I will do over that. It's so dry. It's not just, there's a reason why. Think about it in a second. Okay, and I will do it with the whole class. What am I really doing? What does it mean, working capital? It really is net current assets. Why I'm calling it net current assets? Very simple. I'm taking the net assets minus net current liabilities. I can look at them as together as net assets. Does that make sense?
And this I understand.
And then when I took
can
a
see.
difference, when asset goes up, my cash goes down. If the asset goes down, it will increase cash, but we will do it after the break. Okay?
Okay. If I may, the last one is the. Can you go back to the board that you showed us the last calculation?
Which one? This one?
No, go down. With the no. Go to the board that you wrote the calculation.
The board I got. Yeah, here we
Yeah,
go.
yeah. Yes.
Just go
And
down.
the last calculation 1917. It's this one. It's
Yeah.
can explain -7 and then +7.
So by the way, if you look at the statement of cash flow, you have this number and you have this number. You see, you have
Cash flow.
483, you have 7484.
Yeah.
And you sum them up, you get 1267.
Yeah.
And I said, well, it's nice, but I would like to see it in the stuff we talked before. We understood that was the really cash from selling. Is that right? And I said, if I add that one, it really is my inventory went down by 791. So by selling the inventory and getting full cash for the inventory, I got more cash of 791. Whatever I sold in cash is also increased the cash. So whatever I raised money plus whatever money I made as a profit in cash, different than the 483, plus the reduction of inventory that I got money, that's really why my cash is 1917 now. You know, if you see mathematically, I didn't really do anything. But this number is very clear. It's the inventory. And this one is really this one is my gross profit if I measure it in cash. And the two of those really what makes the 1267, which is really my interest to know how much money I made from operation. So the money I made from operation is whatever I have net income plus the increase in working capital. It turned out to be the same. Okay?
Why the net income to -7? What it means? It means
net income -7. Don't forget, not all the income I got in my pocket. I still gave some credit to some of my customers. So not all the money of the 1274 I received. Some money I will get next year. So how much from my profit I got in cash? It's less by 7.
Okay, so the cash, because the 7 is account receivable, so it's not cash, so that's why you minus it.
Exactly.
And how about another one? You +7. Another one is working capital.
No, see, if I'm see, this is really this is done just for intuition. Okay, this number plus this number, hold a second, 483 plus 784, this is really the profit for the cash from operation. I just trying to make the meaning of the sum of those two in a different way. So I subtracted and added 7. So I didn't do any mathematical error, correct? Now when I subtract, that get a meaning. I can translate that as my profit in cash.
Yes.
And that one, it is really money I received from selling the inventory, some of the inventory. So that's why I did minus and plus. Fair enough?
It's good to understand why +7, what it means.
Say if I'm telling you, say this is really what the statement of cash flow telling me to do. Is that right? 483
Yeah. The result is the
plus.
same. Mhm.
So I'm just doing it for you as a student, so you can understand also the meaning of that. So that's why subtract and add. I really didn't do anything. And now this is a meaningful. This is mean how much cash I made from profit in cash, and that's one how much money I received selling part of my inventory for cash. What's his name?
Yoram, but you can also call him Yon.
Okay, you're also in charge to make sure I tell you everything you need to know about the requirement of the course. Okay? One requirement I already told you. You have to enjoy the course. If you don't enjoy the course, you don't pass the exam. You don't pass the course. It's a requirement. Honestly, it's such an important topic in business. You know, of course, unless you like to be an accountant, that's a different story. Nobody likes accounting. I don't think even the accountants like accounting, but it's such an important topic. You cannot pass it. You really have to know it very well. So, so you really should enjoy it if you have to know it. So you better at least enjoy it. And you can do a lot of beautiful stuff. By the way, just a comment. I know how many of you guys doing predictions or writing algorithm to predict financial data, and many mistakes, you know, are done doing it. One of the classical mistake is, you know, people, and we will learn in this course, by the way, some ratios that take the data from here, take the data from the income statement, but the truth of the matter, they shouldn't take data from here because all the information here is already here by the difference. And very few people can say it unless you really have a very good understanding. And that's really already projections or writing algorithms. Very smart people doing that works. And then they don't understand why they get algorithm with low performance. You can really improve performance by taking this one out and not just by adding. And that's very interesting. And they don't really get the idea. Now you can tell because every number here, it's a difference between those two. So if you take the balance sheet beginning of the year, balance sheet end of the year as a one big vector, whoever's a mathematician, that will do the work much better. Anyway, that's just a comment. Let's move on. Okay, I'm going to come back to that. Don't worry, as I promised. I'm going to go now, transaction number 5. Transaction number 5, pay suppliers. Okay, and what does it mean? You know, remember, we bought inventory. We didn't pay the suppliers yet. You gave us inventory on credit. So we owe the guy or the suppliers a total of 800. So if we're paying them, what's going to happen in my balance sheet?
Nothing.
I'm paying cash, yeah?
Nothing's gonna happen.
Why? The cash is going to go down.
No, the cash will go down and the current liabilities will go down. That's it.
Beautiful. And is anything going to happen in the income statement?
No.
No, you're absolutely right. Is anything going to happen in the statement of cash flow?
Yes.
Yes or no?
Yes. Yes.
Yes or no?
Yes. Yes.
No, no, no.
Why not?
You tell me why not.
It's not a transaction. Means
What's going to happen in the statement of cash flow? The current asset is going to go down by the amount I'm paying, and the liability is going to go down by the same amount. So the working capital is not going to change. Let's try it. Let's see if I'm right. Let's click on it. Okay, I click that. Number 5. Yeah, it's true. My cash went down by that amount, 768. What happened to the liability? Went down to 32. See, the assets went down. Hey, I was wrong. In fact, you were right. Hey,
You got
I like it.
100 in
This
the
is make me the happiest when my student is right and I'm wrong. Why I was wrong?
Because the definition says the what cash flow.
You know, it's true that the current assets went down like the current liabilities, but the current asset, not including cash, went down by nothing. Is that right? What is the definition of working capital?
that is
I
right.
was wrong.
Current assets minus current liabilities.
Difference between
Not including cash, remember?
Yes.
So if the cash went down, it doesn't change that one. Liability went down by the 768. So working capital did change by 680. How much was it? 768. So let's see really if now I'm right. I was wrong because I didn't really, I don't know, the break probably got me out of focus. Anyway, these two haven't changed, correct? 16 minus 32. This is my new working capital. Is that right? So what is my new working capital? Let's do it again. My new working capital now after transaction number 5. And the working capital the next year after transaction 5, it will be
16.
7 plus 9. That's the current assets minus 32. Is that right? How much is that?
Minus 16.
Minus 16. Very good. How much my working capital at the beginning of the year?
791.
Was 0. No, from the very beginning. Remember, this is accumulating all the 5 transactions. So change in working capital now stand on 0 minus 6 minus 16. It already should be, let me take it back. The working capital is 0 minus 16. So it's minus 16. Okay, it's declined by 16. No surprise how much we see in the statement of cash flow, 16 here. Fair enough? Because we have a minus here before.
You
Good.
just repeat.
Is there any change on the income statement?
No.
No, beautiful. So balance sheet change, balances change. There might be a change here unless the definition of working capital, but the working capital did change. Let's take the next transaction.
Can I just ask a question before you
Sure,
continue?
definitely.
Besides the technique in regards to working capital of the current assets minus the current liabilities, what is working capital? What is that? What are these people? Are these machines? What is this?
Yes.
You can think, very good. I'm glad you asked that. Okay, I just started it in the beginning of the session and I didn't give it a better definition. I tell you why I want to give it a different name. It's my name, okay, which reflect quite well what it is. Let's go up. That's the way I defined it. How about if I would define it as net current assets? What does it mean? Look at that. This is current assets net of cash. Leave the cash aside. You subtract from it the current liabilities. Think about it at home. You have a house. The house is $1 million. You have a mortgage, 600. How much net assets do you have in the house? 400. Working capital, it is like I'm looking all my assets, the current asset, not including cash, how much net I have after I subtract loan that I took from some other people, current loans, okay? Not long-term debt. So it's another word, it's a net cash asset. That's a little nicer definition. Working capital, in fact, it's a good name too. In Hebrew, the translation in Hebrew is a very bad translation. I won't even say it. Net working capital is it's a good title. And
You
it's
mean
really
is
saying,
you mean zilut?
no, it's on choser. It on choser, but there's nothing coming back to you really. So the definition is really bad. So forget about the Hebrew translation.
Order filled.
Yeah, the English definition, I like the title in English. It's working capital. It's a capital for working. Just think about it. I'm running a business. I'm buying inventory. Inventory is a current asset. I need to spend some money to get inventory, otherwise I won't have inventory. On the other hand, I don't have to finance everything. Maybe somebody give me a loan. Give me a loan and don't ask me for any interest. It's supplier. The supplier give me inventory. In our example here, he really financed the whole things because when we took the loan, the inventory, when we bought the inventory, we didn't pay the supplier anything. So he financed everything. But if I bought inventory, let's say for $1 million, and I had to pay the whole things, so my working capital is 1 million. That means I had to come up with that money from somewhere else because the supplier didn't give it to me on credit. Does that make sense?
If I may, Professor, I think we're familiar with what you call working capital as a closing balance, maybe?
As what?
Closing balance?
No.
No?
No.
Okay.
This is the closing balance. That's column. Is the closing balance. Working capital, think about that. Just think about it. What do I really have in the balance sheet? If I'm taking the inventory, account receivable, other current assets, add them up together. What did I have left in the current assets? Cash and other current assets. Do you agree with me?
Yeah.
If I look at that current assets, not including the cash, minus the current liability, I could have taken the current liability, move it to the asset by a negative sign. Then how the balance sheet will look like? Cash, working capital, which is the net assets. That's it. On the other hand, on the current liabilities, I don't have current liabilities. I have only long-term liability. So now think about it. You know what? It's worth to do that. Why not? I have time. Let's play with it. That's a good game. Cash, other current asset. I'll repeat it. Other current asset. That's my current assets. Is that right? Everybody agree?
Yes.
Then who is financing those two? Moreover, I have also long-term, okay, let me write it, long-term assets. Who is financing those two elements? I can finance them by long-term liabilities. Is that right?
Short-term
or by short-term, exactly right. Short-term liabilities. You right? Is that right?
Yeah.
Now, what else I can finance those two, the current assets and the long-term assets? It's all by
Equity.
loans or by raising money as a stock. So that will be equity. Correct? Now, let's rewrite it differently. I'm going to write this one here, but this time the current asset, I'm going to write it slightly different. It's not accounting. I'm talking as a finance person, and that's the way you should, as a manager, not as an accountant. as a manager, I would like to write here, leave the cash, but this one, I want to write net other assets and net other assets. And what do I want to put in the net other assets? I'm going to take the short term, delete it from here, meaning here I'm going to be left with only long term liabilities. 0 here, because I'm moving it to the top. But if I'm moving it to the top, this one should be equal to the other current, so other current assets minus current liabilities. And here I have only the long term and the equity. Fair enough. I'm sorry.
How do you equal the assets to the liabilities and
Second, I
equity?
made a mess here. Okay. Let me do okay. Why it doesn't like me? What did I do? Huh. Why it doesn't like me?
You did an equation.
Now it will like me. Okay. And here I have equity. Fair enough? Now think about it for a second. This is we define as a working capital indeed. Is that right? That's it, the way we defined it. Now look at that a second. If this one goes up, what the money is supposed to come?
Which one goes up?
Yeah, if the working capital goes up. And what does it mean, working capital going up? The net, which is the net asset. It's all the liability goes up, or the other current assets goes down. Okay?
Again, if the working capital goes up, that means I have extra cash.
If the working
no?
capital goes up, it's all the net or all the other assets, other current asset goes up, all the liabilities
Goes down.
goes down.
Current liabilities, not liabilities.
That's very confusing, isn't it?
Yes, but as far as the cash flow statement, if the working capital goes up, that's extra cash I have, yes?
Correct. But say we want to get intuition. We want to get intuition. Hold a second.
You could just say it's a liquidity or a nezilut בעברית. You have current, short-term.
No. Forget all those definitions. We really want to have a very good understanding. Look at the balance sheet. Balance sheet is made of cash plus other current asset, that's the current asset, plus this one. So all those one is my asset. Is that right? And that asset has to be financed or by liabilities or by equity. There's no other way. Some people define current asset, the cash and other current assets. And we have short-term liabilities and long-term liabilities. For simplicity, you can say the hell with it and just do this one minus current liability. And now I give it a new name. That will be my working capital.
Professor, I just didn't understand why you take out the cash. Cash is a current asset.
Correct. But for the definition of working capital, that's what I do.
So my question is, why to separate in the working capital between
I would love to
the...
give it to you as an exercise.
Because you're getting extra cash over here, if I understand correctly.
No. Well, since you asked it, I will really explain it to you. Okay? It's a very tricky one.
So someone said...
Oh, let's play a game. Hold a second.
Maybe you use numbers. Maybe use numbers.
Exactly. Hold a second. We have 100. Let's put here 500. No, I want to do it different. I will put as a net, okay? It's after I subtract the current liability. So let's say this is 500. Long-term asset is 1,000. Let's say just another example, okay? So we have 1,600, correct? Let's go into long-term liability. Let's say this is 700. Therefore, has to be 900. So far, so good?
Yeah.
Beautiful. This is beginning of the year. Let's call it X1. End of the year, X2. Okay? Let's say the cash went up by 200 to 200. So what is the difference? Let's call it D.
100.
Oh, beautiful. So it would be this one, pay attention carefully. This one minus this one. Is that right? You agree?
Yeah.
Good. Let's say my working capital went up to 700. What's the difference?
200.
200. Let's say my long-term assets went up to 1,200. So what happened to long-term assets?
200.
Beautiful. Let's look say, how much is the total here now? 1,200, 900, 2,100. Okay? Let's say I took a loan and this one becomes additional loan. So this is 900. So plus, minus, give me 200. I wanted to do 300. So let's make 1,000. Fair enough? And this one should be 1,100. Is that right? To balance, it has to balance. The sum of these has to be equal to the sum of these. So what's the difference?
200.
And now I'm going to go back to the definition. Let me put some more columns here. Okay. Okay. Let's really think about what's happening here now. My statement of cash flow going to be 100, is that right? I'm explaining the bottom line. I said in the statement of cash flow is always the change in cash. It's this minus this. In this example,
100.
it is 100. Okay, so let's put a line on the top there. I don't know how you do that here. I forgot about it. Okay, so we have 100. How do I get to this 100, by the way? It has to be explained by those numbers. Is that right? How much the equity, when the equity goes up, so if I would say change in equity, how much that's adding to the cash? 200, isn't it? Everybody agree?
Necessarily.
Everybody agree?
Yeah.
How much the increase in long-term liabilities? Long-term liability. How much did I raise money? Increase my bank account, isn't it? By 300, isn't it?
But this
Everybody agree?
But this is a liability, so shouldn't it be a minus?
No, hold a second. We'll get to that. But let's understand, what does one do? If my equity goes up, I have more cash. If I am taking a loan, I have more cash. So I have 500 extra. But the cash went up only by 100. So where those 400 go to? Who wants to tell me? What happened to my working capital? Went up by how much?
200.
What does it mean? My assets want more than liability, the current liabilities. I repeat it. It's a very important sentence. My current assets, not including cash, went up by 200 more than my current liabilities. So money has to come from somewhere to increase assets because 200 wasn't financed by current liabilities. So this is the usage of 200. Is that right? Everybody got it? By the way, this is the hardest statement. What else do we have? Hey, very funny. Okay.
The liability.
How much we have here? I think I screwed up. How much is the total of those two?
2100.
I think hold a second. 2100, is that right?
Yes.
And that should be equal
2100.
Is that right? No, it didn't like me. I have to put a plus equal, I think, here. And what happened? Yeah, that's my mistake. I made a mistake.
There's a value missing there.
Yeah, I know. Let me fix it. There's 200. Yeah, that was my mistake. That should be 1900. So if that 1900, I cheat here a little bit, make it 800, okay? Sorry about it. You know what? No, let's leave it alone. And I will just change one of those numbers to be 400 here. Sorry about it. So here it's, let's say it's 400, so that will be 300. That's good. I will leave it that way. This is 2100, and this one, I would like it to be also 2100. So sum of those two. Why it doesn't like me? Let's do it the primitive way. Plus this one, plus this one. It's giving me, so I will increase this one to 900. So it will be just fine. Okay, sorry about that. And here I should write 400. I'll repeat it. I made a mess. I apologize. And let me take that one. 21, it's okay. Let's put that one back to what it was before. How much did I put there? 200? Yeah, that doesn't make a difference. Okay, one more time. We had the cash went up to 200. The working capital went up to 900. The long-term asset went to 1200. Total assets become to be 2100. The money had to come from somewhere, or long-term liability or equity.
1 minute, Professor. The
Yeah,
total.
one second.
Okay.
I promise I will give it to us. 1 second. Now I said, let's start the whole thing all over. Okay? So it will be the bottom line of the statement. This is change in cash. That's what we're trying to explain in the statement of cash flow. Okay? Fair enough? And what is the change? It already went up from 100 to 200. Okay, how is that happen? So I'm looking at that, long-term liability went up by 300. So this 300, that was the reason, is that right? That I have cash. Everybody agree? Increase in liability. It's increasing my bank account. If I issue more equity, I have another 200, so I have extra 500. Is that right?
Yes.
So far, so good. So that's come from increase in long-term liability. This one is an increase in equity. Fair enough, so far so good?
Yes.
Those are sources. By the way, we will call them financing activities. In a minute, I will go into the definition. Let's see other things that happen here. What happened to asset? Long-term asset went up by 200. How did it go up by 200? Did I need cash?
No.
Why not? How did you buy more asset if you don't have cash?
So
You
yeah,
have to use
long-term.
cash, don't you?
You could also take long-term liabilities.
Oh, so maybe out of those 500, I use some of the money to finance these 200. Is that right?
Yes.
Beautiful. Let's think about this one now. What else we have left? By the way, how much is the difference here? This is a 400, correct?
Mm-hmm.
Okay. What happened with this 400, by the way? What happened here? By the way, it's usually you write it down well, right, but we'll fix it in a second. What happened here? Let me just make sure that it's all balanced. That's 21. That's 21. Perfect. That's 1, 16, and that's 16. Beautiful. And let's just take this one to here. 15. Why do I get? Yeah, this is 15. That's okay. No, I need to have 16 here. I should add the balance sheet, the cash also here. Because this is the total. And here I need to get 16. So that's perfect. Good. Everything balanced. So I have an increase in my equity. That's a source of cash. I have an increase in liability. It's a source of cash. I have a usage of buying assets. So I use for 200. And what happened here? Anybody want to tell us?
Can I just say the total asset here 2100. It's only include and it's not include cash.
One more time, sorry.
The total current assets in the second year is 2100. You written here, right?
Correct.
It
First
does
year I
not
had only
include
100.
cash.
You're right. The beginning of the year I had only 100. The end of the year I have 200. So the difference is 100.
Yes, and
That
total current assets.
difference, pay attention, that difference is right here. Okay?
How about the total current assets?
It
in the
is,
second year.
yeah, cash is current assets, but we're not counting it in the working capital.
I know, I mean the total current assets.
Total current assets will be here, this one, plus this one. And
And
here,
the total assets.
why did it didn't like me?
Yeah, Professor, there is a mistake in year 2. You need to reduce the 200 from the total assets.
No, I don't.
Yeah, I mean, I thought if you summarize all the assets, you get to 2300 currently.
Okay, we have 1100 here. You're absolutely right. So
Yeah.
maybe I reduce that to 700. Is that okay? 700 plus, what am I doing wrong here? Let's do this one plus, you're right. Beautiful, thank you. Beautiful. Now it's correct, okay? Everybody happy?
Yeah.
Okay. Now, what does it mean working capital going up by 200? I have to use cash to increase my net assets. It's just like if I'm buying long-term assets, I need to use my bank account and go and buy long-term assets. Long-term assets could be a building, could be machinery, okay? And current assets, that could be like buying inventory, but I don't get credit from the supplier, so I have to pay him in cash. Or maybe he sold me a lot of inventory, but some in cash and some in credit. Net is I have to come up with 200 this year. So I'm using here 200 for my cash. Those 200 could come from where? They could come for those two things. Is that right? Everybody happy? So far it makes sense?
Not yet for me. I asked why does cash is not
No,
included
slowly. That's first of all, this is, okay, this is minus increase in working capital. And what is this one? This is increase in capital. We call it capital assets. Okay, why we call it capital assets? Because capital increase in capital assets. Fair enough? And that's the name, it's the conventional name to that part. So let's think about it. The end of the day, I have $100 cash or 100 million cash in the bank account more. It went up. But how did I get 100 more? I raised money, 500. Part of the money, I bought buildings, I bought capitals, and I bought also inventory or some other current assets. So the difference between the 500 and the 400 created the change in the cash. Now question. Somebody wanted to ask a question.
I just didn't understand why not to include the cash in the working capital, because it is a current asset with high liquidity, such as the inventory.
It's a good question, by the way. It's just a question of definition. The objective of the statement, this is a statement of cash flow. And the objective of the statement to explain this one, the change in cash. So that's why we took the cash out of the current liabilities, current assets. We try to explain this number, so we put that number in the bottom. See that?
Yeah.
It
As
just
you said, that's a matter of definition, right? At the end, the cash is part of the current assets.
Correct.
In the statement.
But this is a beautiful example, by the way. Let's go back to our simulation. Okay? We got to the point, I think, let's do all of them. All of them. We did raising money, we bought inventory, we sold inventory, and we paid some of the supplier. So that's the bottom line we had. Now, what happens if I buy machinery, property, plant, and equipment? What's really happening now depends how I pay for it. Is that right? If I paid in cash, my cash will go down and my long-term assets will go up. Please, this is a very important one. I'm going to use some of the cash and my long-term property, plant, and equipment going to go up after transaction number 6. So I'm clicking on it. My cash really did go down by 400, but my property, plant, and equipment went up 400. It's really using cash. Let me do the whole things again. Let's do up to 5.
This software is a simulator?
Yeah. Just 1 second. Pay attention. I had 1149. If I'm buying a machinery for 400, this is going to go down to 749. It's not going to affect the income statement, but it does affect also another account in the balance sheet, which is property, plant, and equipment. So if I click on the 400, two things happening only in the balance sheet. This one goes down, no surprise.
There was no business transaction.
Hold a second, this is, my cash went down. And in addition, pay attention, it's very interesting.
Cash flow went down, obviously.
My assets goes up, my long-term asset goes up, but that's a usage. That's why it's a negative here. Okay, guys? That's pretty cool.
But how did you in the balance sheet equal the liabilities and equity after you raised it?
Check. Of course, it will be equal. The cash went down. Okay.
Oh, sorry.
And what else happened? And that went up. So no effect. Yeah. It always will be.
So the liabilities and equity didn't change in those 400.
Correct. This too didn't change. Beautiful. Let's take the next example. Pay interest. Now, remember, we took a loan. We had a long-term loan. Is that right? It's time I need to pay interest. That's a hard one. What's happening when I pay interest?
You decrease cash.
The question is, did I pay cash or not? Let's say I did pay cash. Let's say we can read the description.
First, you spend your liabilities and the difference you pay in cash.
I'm paying interest on the liability. I didn't pay the liability yet. So if I go read number 7 here, it's explained to you exactly what the transaction is. The company pays interest to the bank for the loan of 130. The interest is 130.
Here, it also says that you
so
paid
it's
cash.
explaining to you, okay, that your cash has to go down, okay, and your earning will go down. Your profit goes down. It has to, okay. So let's see what's happening. Let's click on it. Pay interest. I'm clicking on it. Okay. So in the income statement, this stayed the same, but there's a new line here, reducing my profit. And my cash goes down. So hold a second. Now, please, this is a beautiful, beautiful simulation. Why? When I reducing the profit, the truth of the matter, my equity is going down by 130. Very important sentence to notice. My equity is going down by 130. And why is it keep balancing? Because my cash going down by 130 and my equity going down by my 30 because my income statement went down by 130. That's beautiful. Now, what the statement of cash flow looks like. What really happened from cash point of view? I have 130 less. Why do I have 130 less? Because my net income went down by 130. That's it. That's beautiful. That's the beauty of linking all those 3 statements together.
Professor, can you show again the definition of retaining earnings?
Oh, for now, since we have only 1 year, and I will change the definition to more complete later on, retained earnings is the profit of the year minus dividend of that I paid that year. But since I haven't paid any dividend yet, it's just the profit of the year. So no surprise. You see, 353, it's exactly the number here. And since I'm starting always statement of cash flow from the net income, it's the same number here. It will change when I change the definition of retained earning to a more complete definition.
Can I ask a question about the last transaction?
Yeah, we'll see in a minute. Okay, what about the next one? Investment in subsidiary. I'm buying another subsidiary. For you, for now, it is just like buying another long-term asset. What happens if I buy a long-term asset?
You increase your equity.
Liability, no.
Hold a second. You're buying, what happened to your bank account if you buy a new a new car.
Going
Your
down.
bank account goes down, isn't it? If you don't take a loan. If you're buying another building for cash.
Long-term asset increase.
So exactly, so your cash should go down by 300 and your asset should go up. Do we have here subsidiaries? You see, we have another account, subsidiary. So that number has to go up by 300 and the cash should go down by 300. The balance will be kept. Will the income statement will change?
Nothing. No transfer, no.
Beautiful. Is anything in the change in the statement of cash flow?
Yes.
Definitely, the cash is going to go down by 300.
Sure.
So which other things has to make sure that explain why it went down? Because net capital expenditure goes up, because net capital expenditure, it's the change in the long-term assets. Net capital expenditure, if it goes up, that means we spend money on the long-term assets. So it will be everything we're investing in this category will go to investment in capital expenditure. So here, if I will click now on this one, no surprise, subsidiary went up, cash went down. But look at that. From 0, I went to 400. From 0, I went to 300. Together, it's 700 investments in long-term assets. No surprise. I'm getting 700 right here. Beautiful.
Can I ask a question about the previous transaction?
Sure.
Why, when you paid interest, it went the equity decreased instead of the liability? Because when you pay,
the equity, by the way, doesn't reduce, but I'm accounting for it in the retained earning. Retained earning went down by 130. It really is like equity went down. You're absolutely right.
No, it was a question. I asked why didn't it came down from the liabilities? Because when you pay interest, you return some of your liabilities to
Hold
the
a
bank.
second. Very good question. Very good question. If you take a loan from the bank for $100,000 and the bank charge you 5% for the year, how much you owe the bank by the end of the year?
105.
Correct. But so your loan, if you didn't pay part of your loan, you still owe 100,000. Correct?
Correct.
And the 5,000 is an expense. It really is expense that goes from your salary.
That I also owe to the bank as a liability. I
Correct.
think
But
no.
no, but if I paid it, I paid only the 5. So I will reduce my cash. Correct?
You reduce, yes, by cash, but in the assets part of the balance sheet.
So I reduce the cash. Now, let's say the revenue is your salary. Isn't it coming from your salary? So think about the net profit is your salary, and you have to subtract it by the interest. Distinguish between payment of the principal of the loan to the interest you're paying on it. You have to distinguish between the two. When you pay the principal, it's a different transaction. When you pay interest, it's really reductions of your revenue, reductions of your profit. And then your profit becomes to be less to your total equity. On the other hand, when you're paying liability, the principal, it doesn't affect your equity. Very important. I don't know if you've gone over that in the accounting class. You should have. But it's a very good example here. You can see it beautifully. Okay?
No, but I don't want to stuck the class. I'll see it again.
Look at my videos, by the way, and I also, this one I will add, as I said, I will add it to the first chapter of this, and in a minute, I'm going to utilize the last 15 minutes or so to tell you how you approach this website, okay? So you can really view my previous years or this year, and the whole explanation is right there. You can see it again. Okay, let's look at other things. Investments in intangibles. It's just like investment in subsidiary. It is just like investment in a long-term asset. So it's going to reduce cash also. You see the cash went down again, just like subsidiary. All of those are the same transaction. I'm increasing investment in long-term assets and my cash goes down. No surprise. Let's look at the investment section. I have now 820. And how is the 820 becomes to be? Is the 400 plus 300 by 1200 by, 4,000, 3,000, and 120. That's the 820. And that's very simple, you know. My profit, I'm using my profit, yeah, and my net cash becomes to be lower. See the beauty. The number here is always match. The number here are always matched. Very important. Let's look at the next one. Sales and marketing, that's expense, is that right? Like an interest. When I'm paying for getting a loan, I'm spending money. I have to pay for the usage of money. For using
liability.
I'm spending money and launching a campaign of marketing. I'm spending money. So that will be part of the profit, of the gross profit. I'm going to use it to really do sales and marketing. So if I click and I spend 110, no surprise. I have 110 here, reduced my profit. If I reduce my profit, that means my profit is here. And I have much less cash because I had to pay for that marketing. Okay, everybody got it? That's a hard one. Is that clear, guys? Hello?
Yeah, salary you remove from the assets.
Absolutely right. Some things, what about, did we do general and administrative? That's what it was, or sales? Now let's do general administrations. Salaries, it's just like paying salary to that person that makes the marketing. So no difference. This will have the same characters. I click on it. So here we go. We have general and expensive 75. My cash went down and down, and my profit goes down accordingly. So, and that will be always balancing. When those accounts, I'm adding the minuses here, my profit goes down, that part in the bottom goes down because the cash goes down. That's beautiful. In the statement of cash flow, all those expenses affecting the net income, they don't have any effect on the other stuff. That's the beauty. Okay? How many more left? We have one more or two more. Investment in commercial bank, any commercial papers. Anybody want to tell what this one is?
Yes,
a company
you,
has some
take
cash,
it
they have 14 million. They want maybe to, they don't really need the money for everyday life. So they want to make some money by investing in the stock exchange. So they decided the CFO said, you know what, let's take 6 million, let's buy some commercial paper. Commercial paper could be many things, usually government bonds. They are quite secure. If you need the money, you can sell them right away. And if you don't need the money, maybe you can make some money, just a little interest. Although today is really minimal, but at least I get some money out of. So this is just like another investment. So if I click on it, again, my cash has to go down by 6. I got down to 8, and something has to go up. Where do you think it should go up here?
long-term assets.
No, this is a current asset. It's not a loan because it's a commercial paper. This is when I buy, let's say, stock of another company, but I'm not planning on holding it for a long time. So it will go into the other current asset. On the other hand, if I'm buying a subsidiary, which is most likely I'm going to hold for a while, that will go to a long-term assets. Okay, so that's the difference between this one. This one is when you want to hold something for only short term. You have extras, you have a lot of cash, 14 million. You don't want to sit in the bank account not getting any interest. So you might buy government bonds or maybe some shares of Amazon because it's very liquid. So you can always sell them and maybe make some money. Most likely you will invest in government bonds.
So I think that if we had the wording of the explanations prior to the class, and it would have been easier for us to understand the steps.
One more time.
Again, I'm saying that if we had read the explanations that you have on another page.
You have the whole explanation, as I said.
Yes, we will get them, I assume, for next class, but before this class, we didn't get them.
Correct, you'll get them. From now on, you will get the whole, this is the third part.
Okay.
It wouldn't make any sense to you, believe me. I tried it. Okay? And if I need, I will repeat a lot of the stuff I said today. I really have a feeling that you didn't get enough in the accounting class.
What we had is that
I'm assuming you know nothing.
Just to make sure, we like in the last class of the course, we had one exercise with the 3 balance sheet of a very, very simple transaction. One simple transaction of that repeat itself a few times. This is what we had.
Okay, but as I said before, I'm assuming you don't know anything.
Yes, exactly.
So I'm right.
You are right, and we are terrified.
Yeah, and my wife is always telling me that I'm always right, and she gets scared. No, I'm just kidding, okay? Unfortunately, it's from really my experience, and it's not only University of Haifa, it's everywhere. People has a really hard time with accounting classes. They don't get enough. And honestly, having said ever since I said, you should watch my video at least 3 times. Otherwise, it won't be fair to yourself. Because it's not hard, but it's very confusing. It's not hard, I repeat it. It's easy. You will see eventually it's easy, but it's very confusing. The brain is not used to this way of looking at things. Okay, we have last one. I will go over that again next time. And last one, it's really fun. I'm accounting for depreciation. We have assets, remember, 400. And let's say we have depreciation on it. The truth of the matter, we have also intangibles. Anybody knows how do you call in English depreciation on intangibles? What's the name for it? Anybody knows the difference between intangibles, amortization and depreciation?
Yes, I think.
So depreciation is on fiscal assets like property, plant, and equipment. You do depreciation on fiscal assets. When you depreciate intangibles, we just give it a different name. It's like depreciation, but we call it amortization, okay? You might see it in you will see for the paper, and I'm gonna spend the next 15 minutes on that one. I think I'm supposed to finish it Q2, am I right?
Yes.
So I will spend the next 10 minutes to answer all the questions I should give you regarding to the rest of the course and also what I require. So when I do the depreciation, let's click on it and look at it.
Order filled.
Okay. So by the way, I ignored amortization. I just did depreciation, but I could have added 14 amortization. Would be very similar. Pay attention, I did minus 40. Depreciation, after all, reducing the net value of the long-term assets. Everybody got it?
Yes.
Beautiful. What else happened? Look at the income statement. In the income statement, by the way, pay attention. This one, the title is accumulated depreciation. This one, it says depreciation. It happened to be the same number because we only have 1 year. But if I have more than 1 year, it should be different numbers.
Only the accumulated depreciation will be
That's why
different,
it's
right?
accumulated. You're absolutely right. If I had 2 years, next year, the depreciation might be the same if it's a straight line depreciation, but the accumulated would be 80.
The 18, yeah.
Okay, but let's focus on this one for now. So what happened to my revenue? Went down, net income went down by 40. Pay attention to beauty. That means that those two together went down by 40, but also the long-term assets went down by 40, so it's balanced. What does it show in the statement of cash flow? It's very simple. My net capital expenditures goes down by 40. Because, listen, look at that. I'm looking at the net long-term assets to calculate my investment. So if I take 400 minus 40, that's 360. Everybody agree? Plus 300 is 660. Is that right? At 120, you get the 780. It's beautiful. Honestly, it's very beautiful. Everything's matched. I spent a lot of time developing this component. And by the way, Barbara that joined us, she's working with me on other type of component. And that's what we do in Academy City. We develop really unique tools to study things that are hard. Okay? And should be really a hard session for somebody that don't have expert. You know, hi Brenda, can you turn on your video?
Yes, doctor, let me turn.
Yeah. So is your video works?
Yes, it does.
Okay, she sits in Uganda, by the way. And she works with me on a lot of other stuff. In fact, she's working with me now on another simulation for corporate valuation. It's a much harder simulation. So it really is, the reason I built that one is that I know students usually have a hard time in studying accounting. And we covered in this session for less than 2 hours, about 2 hours, more than you cover in a whole course, usually. And we also talked about statement of cash flow. Now, I'm aware to the situation the student come to me not ready. I do. And that's what I did it. But please don't give up. It's your career. This is a very important topic. Accounting is extremely important. Take the advantage. You have beautiful explanation to each one of them. If I were you for next time, go over each one of them. Study each case. Okay? By the way, I made another feature here. If everything is empty, you click here, it will fill up the whole thing. If you are smart enough, you can invent transactions and just type them here. Okay, if let's say I sold, let's say I raised more money, another 100,000, 100 million as debt. So I increase debt, so I can change this one to 700. Everything will balance and everything will work perfectly. Take advantage of it, really. It's a present. It really is a present to you. Don't be intimidated because you're getting lost. It's natural, especially when you don't have enough background in accounting. Okay, guys? Okay. What I would like to spend the 5-10 minutes now, requirement for the course. Okay? I want to treat you as a managers and not like a person taking basic course. So the requirement is a paper. And what you're going to do in the paper, frankly, less of what we studied today, because what I want in the next session is to use all those concepts. And I couldn't use them unless you know what they are. So in the next sessions, we're going to talk about vertical, and we will talk first of all about balance sheets or ratio analysis about balance sheets, vertical and horizontal analysis for balance sheets, vertical and horizontal analysis for income statement. Then we learn ratio analysis. And then eventually I will talk a little bit about valuation and special topics, okay? And then in your paper, I will talk about it when we'll go to the homework. If we click here, the assignment is already written there. I will explain it in detail. I will ask you to do vertical and horizontal analysis for a company you're going to choose, okay? I will be even nice to you, and I give you data that I already collected for companies, so you don't have to waste your time to go and download financial statement, and that can take you a hell of a lot of time. So I will provide you for a list of companies, and I will show you where you can get the data from my website in an easy way. Take that data and put it in Excel or similar to Excel, or make an Excel similar to what we're going to use here, for example.
Can we also use our own companies? Like, I mean, our
Each one, no, don't get yourself into trouble. I wish you could, honestly. If you want to take the challenge, you're more than welcome. But I wouldn't recommend just, unless you tell me I'm in a good level, then I'll tell you, God bless you. So this one will ask you to do for your company, not really that hard, okay? And then we talk about also the income statement, and we have another analysis for income statement. And then we talk about ratio analysis and this different type of ratios, okay? And everything, you have really a recording, you have a video, you have explanation, everything's ready. All the material, you don't need to go anywhere else. That's beautifully organized for you. And finally, I will go over special topics, and then I will spend half or some of the class in the end to discuss what you're supposed to do in the paper.
So, Professor, the topics are not, all the material is not on the Moodle, it's on the...
Everything is here.
So here it's like, it's not the...
So how do you get here?
Yeah.
Okay. So who is asking?
Danny.
What's your name?
Yona.
Yona. So that, I tell you what we're going to do. I'm going to stop my sharing, and I'm going to give you the right to share. It doesn't like me. I hate it when it happens. He hates me all the time. Hold a second. Let me scare him. I had this Zoom, by the way. Hold a second. Maybe it will be nice to me now. Is he? Let's see. I just want to give you the options to, I want to stop sharing. Good. And I want to give you the right to share your screen. Go ahead. Yona, share your screen.